What's good, family? It's Mike back with another video. And listen, in today's video, we're going to talk about the jackpot strategy. Yes. This has really been the talk of the town on, across social media, at least from a lot of people that I've been around and stuff like that. This guy is very, very good and holding long-term trades and stuff like that. So I ended up buying this course a while back, and I went through it, and I just want to show you guys what I had gotten out of it. And this is strictly my opinion, so if you want to learn his strategy, definitely go to his website. I'll leave that link in the description. But listen, man, I just want to break it down for you guys so you really understand how to use the jackpot strategy. So before we even get to it, you already know what to do. Make sure you please comment, like, and subscribe. Turn on that notification bell to become a part of my notification gang to know when I post new videos. Good content, great content every single week, man. Don't miss out on it. But other than that, like always, let's get right into the video. Okay, family, so we're going to go ahead and get started. So before we even start this strategy, the indicators that he uses specifically is the Ichimoku cloud. He uses the super trend indicator, and he also uses Bollinger Bands. So I'm going to break down everything in this video. I'm going to show you guys how you can get it on your charts and stuff like that on TradingView. Shout out to TradingView, man. You can also get this on your MT4 app as well. They have the Bollinger Bands on there. They have the Ichimoku cloud, but they don't have the super trend indicator. That's the only thing. But you can still use the Bollinger Bands and Ichimoku clouds to your advantage. So what we're going to do is we're going to go up here to the indicators, and I'm going to go down, and what we're going to do first is we're going to go ahead and add the Bollinger Bands. So you see I just added the Bollinger Bands, and we're going to go ahead and edit it. So for the inputs, for the length, you want to have it on 200, and for the style, you can make the middle black. We're going to make it a little bit thicker so you can see it. For the very top line, you want to make it red, because that's basically I'll basically break that down for you guys. It's going to kind of signify sales for us. Not guaranteed sales, but still some setups that you might be able to take advantage of. So we got that. You see that black, red on the upper, and green on the lower, and then we're going to take off the background. I mean, you can leave the background on if you want. It's just personal preference at that point. So that's where we have it now. So I'm going to go ahead and press OK. So now, boom, we have the Bollinger Bands. And with the Bollinger Bands, you can kind of see how price basically has rejected these areas. These are basically dynamic areas of support and resistance. It doesn't mean every time price hits the Bollinger Bands, it's going to sell. Like if it hits the red, automatically it's going to sell. If it hits the green, automatically it's going to buy. If it hits black, something's going. It's not guaranteed every single time. Like I said, the market has the mindset of its own, but this is what helps Jackpot find particular setups. He likes to swing trade a lot. He'll hold trades for like days to weeks, depending on how long price goes in his direction. So he'll catch these trades off the daily and weekly time frames, and he'll be able to hold. So you see how price got down here in this area. You see this right here. It actually gave us an engulfing candle on the daily. So this was a significant area on where you could enter and take this up to the upside. And mind you, when you're taking this stuff on the daily time frame, it's a lot slower when you're finding your entries, but at the same time, you can take this all the way up. You know what I'm saying? For like 500 pips plus. It's very useful, but it's a lot slower. That's the only thing. If you're a patient kind of person, you can wait a couple days, a couple weeks until price forms itself around these particular areas to give you a setup. Then fine, by all means, go ahead. With a 0.10, you would have made $536 with that 536 pip move right there. So definitely keep that in mind. So basically, the Bollinger Bands are his TPs as well. So as price is going up, if you would have took it right here, Jackpot would take it all the way to the middle Bollinger Band if he wanted to. He would take it to the middle Bollinger Band, and he would TP at this area. Or, if you're a 500 pips, some people would have probably TP right here. You can see this buyer's exhaustion right here, and then you see that engulfing red candle that just formed. So you could have pulled out there, or you could have pulled out when it got to this price, and just had your stop loss and profit, or stop loss at entry, however you wanted to do it. But you could TP right here, so you could go up. You could TP up here close to the red. So, and you see a total, I mean, holding that trade that long, that's about 17, almost 1800 pips. So this is how he does it. So every time price comes around, these lines, these Bollinger Band lines, he waits for an engulfing candle or some strong bearish or bullish pattern that's going to give you a confirmation to be like, okay, price has enough momentum within this candle to make another daily, candle on the daily chart or candle on the weekly chart, and to where I'll be able to take price up to the upside and moving towards my Bollinger Band. So that's why he comes out with so many profits. So that is the Bollinger Bands. Like I said, to break down it once again, you're just taking buys and sells around the areas where they, it hits the Bollinger Bands. You know what I'm saying? Like right here, you could have, like I just explained down here, you could have took a buy right here, and then right here, you could have took a buy right there, depending on what pattern price would have gave you. You know what I'm saying? And then right here, when it got up close to this Bollinger Band, and you seen this engulfing candle, you could have taken a sell right here. So that's basically what he's doing, basically, with the Bollinger Bands, okay? So we're going to remove those drawings real quick. We're going to stay on course. And let me go to the Ichimoku cloud. So I already have it marked down here, but it's called Ichimoku cloud. You see it. You see it. You see it. You see it. So I'm going to go ahead and click this. And what we want to do is we want to go to the settings. And everything right here stays the same. You don't want to change anything like this. And right here, what we want to get rid of is the lagging span line. We don't need that. It's like an extra moving average according to what Jackpot has said. So he removes that. And for this, you can make this, I mean, this stays green, but, I just like the darker green. And you can make this red. And you can keep the background on it. You can keep the background. So this is what it looks like. And we're going to go ahead and press OK. So boom. So now from the same areas, now we have the Ichimoku cloud with it. And now this is why it's so powerful on the higher time frames, because when you get these confirmations on the higher time frames, because when these moving averages cross, if any of you guys have heard of the MA cross, when the averages basically cross to where it's like an extra confirmation for you to get in the market. If you find those areas of the moving average on the higher time frames, you can catch a lot of pips. So this is how Jackpot does it. So you see right here, just like I was explaining to you guys, where the Bollinger Band was right here at the bottom, right? So you see that engulfing candle, boom, you know what I'm saying? Even if you wanted to enter right there and you saw that the moving average on the daily was getting ready to cross, that's your confirmation to where you could get in. You could have held price all the way up, and you see how, prices stayed above moving average, stayed above the moving average like that. And then finally, it came down and hit the moving average. You can pull out right here if you wanted to see if you can get another entry, because as it came down here, now it's in the cloud. But what he does also is he'll wait for price to give him a strong confirmation outside of the cloud. So after price would have formed this engulfing candle right here, you know what I'm saying, then you could get into the market once again. You could take this candle right here to the upside, and you see how it went to our middle Bollinger Band right here. So it kind of helps you. These Bollinger Bands help you get a direction, an observation of where price is going. So you see it broke through this and it retested that mid Bollinger Band. So as long as this was held, you were fine. You were fine. And then you see you could have added some other entries right here off of this engulfing candle right here. You see the moving average cross right here. You could have added an entry. So look at all these entries that you can get from this, like boom, boom. And you could have just held this thing up all the way. Boom. And then finally right here it starts curving around. There's a, engulfing bearish pattern right here, bearish candle. And so this thing starts going down. By this time, you can see that it's crossing and it's going back to the cloud. So you could have taken out your profits. But mind you, from here, where we started, all the way up here, that is a total of 1,800 pips. That is a lot of pips. From, what is this, September 9th all the way to December 13th. If you want to hold that long, by all means, go ahead. You know, you have to be very, very patient with this. But mind you, all you have to do is enter one time, and the rest of the entries that you add along the way, they'll be a lot slower. But at the same time, you know, with swing trading, it's a lot more patient. Well, intraday to swing trading, it's a lot more patient. You know, you're going to be a lot more calm. You don't got to worry about, you know, getting out of the market really, really fast, because you'll have such a great position. And this is how Jackpot turns his $100 accounts to $3,000 accounts, or $500 accounts to $10,000 plus $17,000. Like, this is how he does it, and he just holds the trade. That's a lot of pips. That's $1,800 with a 0.10. The only thing is, what I advise you guys to do, if you want to swing and you know, get in and out in the market real fast to hit your daily amount or hit your weekly amount, you know, make 2 accounts. Make one trading account for swing trading, and make one trading account for getting in and out of the market. That's something that you can consider if you want to do this. If you're that person that you're not that patient, and you want to get your money fast, like within the day. So this is how he does it. And you see, this is, you know, now it's coming back to that Bollinger Band, right? After this engulfing right here, you know what I'm saying? Now it's starting to go down. Now, mind you, support and resistance still takes play in this. It still takes play. You still want to mark up your support and resistance level. Like, if I wanted to, I can mark up, you know, a daily level right here at this particular position. Let me see, right here. This is not only a support, but it's also a resistance right here. And what we'll do is I'll just mark that as my daily level. So now you can see that support resistance along with the Bollinger Bands is a big assistance, because since price is up here at this position up here, you could have taken the sell right here if you wanted to, or if you wanted to wait for price to retest that daily area, which it has already done right here. It's all about the patient game, letting the price, you know, letting the market come to you. You could have taken this sell right here. This was actually a better one than this one, in my personal opinion, just from that candle right there on the daily. Very, very nice candle for us to show us that price is gaining heavy momentum for the sell right there. And you see how it hit off in this area too. You guys see how it hit off? 1, 2, 3 taps down to the downside. So you want to see that. So that was a nice little sell right here. And you see we got that cross that I just explained to you guys for the moving average. So this, you could have taken this down all the way to mid Bollinger Band, which you can see right here. So let's say we took a position right here, stop loss behind this level. And mind you, when you're making your stop loss on the daily time frame, remember this, the daily time frame, that's like 200 pips, 100 plus pips, you know, putting your stop loss behind these zones. Because if I go down to the lower time frame, let me show you what I mean. If I go down to the lower time frame, dang, we can't even see it. Can I go to the hour? Oh my gosh, we can't even see it. All right, here we go. Do you see what I mean? There's more noise and everything that goes into it, but you're seeing the whole picture on the higher time frame. So on the lower time frames, you're seeing a smaller picture compared to the daily, the weekly, and the monthly. But on the daily and the weekly and the monthly, on the higher time frames, you're seeing a bigger picture, if that makes sense. So we're going to go to the daily, and I'm going to go over here. So basically, back to what I was saying, it's a wider stop loss. So making noise in the back, goodness. And you could take it to mid Bollinger Band, and you can see how the moving average is kind of like holding price together. I don't want to say holding price together, because price can do whatever the it wants to do. But you can see how it kind of follows price down, and then he takes it to that mid Bollinger Band. That's about 571 pips, just about. And you see, like, this is like still remember, if you would have took it off this candle, that's February 25th all the way to where it hit it about March 2nd and March 3rd. So keep in mind, if you want to trade this way, you're more than welcome to. I'm just not the person that really, holds these trades that long, but I might look into it myself again, because I was able to take a $168 account all the way to around like $1,700 just by doing this thing. It's very, very simple, because it's slow and you can add entries along the way. So right here, when it reached this, you could have taken out partial profit. You're up 571 pips at this point. And then you could wait for, engulfing, candle, or, a bearish pattern of sort, to where you can like get in with an extra confirmation. I would have probably waited for something like this, to be honest, and then gotten in right here and then taking it down. So you can kind of see how it works, guys. And like I said, this is where he took it down all the way to the green Bollinger Band for a total of 1,574 pips. But mind you, when you're adding entries along the way, you're making a lot more than that. You're going to be up like 3,000, probably like 3,000, 4,000 pips if you're adding entries, maybe more. At least 2,000, 3,000. So definitely keep that in mind, guys. It's very, very useful terminology. What he's got is a very useful strategy. You know what I'm saying? I always tell people, don't hate on other people's strategies. Just go ahead and just investigate it for yourself and just to see if it works for you. Because it's a very, very simple strategy. When people lose off of, certain mistakes, they shy away from a strategy and try and develop another one. No, you don't need to hop from strategy to strategy to strategy. You do not need to do that. You need to find something that works for you. You need to find a set of indicators that works for your terminology and how you operate. And when you're comfortable with that, all you do is add market structure with it. That is it. Because there's one thing that's never going to change when you're trading Forex, and that is market structure and S&R key levels. I promise you, every trader has to understand key levels, key S&R levels in order to trade within this market. That is like primary. That is so important. Some people say it's basic, but to me, it's always going to be advanced. Like, that is literally got to be your main part of towards really understanding direction of price and how it operates, between these particular levels. So this is the jackpot strategy, guys. Wait, I'm actually going to add something else. I can't end it on that just yet. I almost forgot. I'm sorry, guys. So super trend indicator. This is what it looks like. So this is also what he kind of adds onto it. And if we go back, you can see that not only do we get that cross right here with the moving average, we also have that super trend arrow confirmation right here. You guys can see it right there. That is the super trend indicator. So that's like an extra confirmation for him. So as long as it's green, you could have still held this up. But the second that it hits that super trend indicator again, you could run into play of, price going back in the other direction. But mind you, even though it came up and did this, this is where price structure comes in, or market structure comes in. If, a good trader would have known that this is actually an area of price action right here. This is an area of price action right at this particular position. If you go down, we can do daily level again. You can see, because price broke through this level right here, higher high, higher low, higher high, higher low. Then it broke the previous low that it just made, just to retest this low in the back and bounce off. So now this area that once was a resistance is now also a support right now, establishing that area, telling us that price is ready to go back towards the upside. So, and you can see that candle, like I was explaining to you guys earlier, that formed, and then you have the super trend indicator to back it up. It is literally telling you when to get in. So this is why he calls it the jackpot strategy, because this is absolutely amazing, the way that you can follow price towards the upside. It works very, very well with the higher time frames if you understand market structure and everything and key levels. If you want to use it for scalping, I mean, you could. He talks about it in the video. Like if I go to the minute one, he talks about it a little bit in the videos, to where let me see. I'm gonna do this for you guys. To where if you were scalping, all you would do is get in when the super trend indicator turns red or green. So if I go back, let's go back, and what I want to do is I want to hide Bollinger Band. I'll keep Bollinger Band on. Let's say you want to scalp using a super trend indicator and using the Bollinger Bands, right? So this is how he does it. So he'll wait. Let's play it out. And as soon as it hits, he'll get in and he'll take this to mid Bollinger Band, or he'll take it to the green Bollinger Band in this case, because that'll be the next furthest TP. So boom, he'll take it, and you see that, you know, it might not get to it. Is it going to get to it? Oh, it does end up. And you see you could take that. So then you could have TP right there around that area, or you could just TP until it hits that super trend indicator again. So you could have pulled out your profits from this move, and now you would have bought in right here. And this is just from your scalping. So boom, you can see it's going up, it's going up, it's going up, it's going up, it's going up. It's not going up, it's not going up, it's not going up. And I think it's going to hit the super trend indicator. Price is consolidating in this area, so this is a particular thing that you want to consider. He talks about is basically consolidating until it gives us the bullish move that we want. And you see it hit it, so you would have pulled out, and you would have pulled out your profit and entered the sell right here. And this is all that he talks about. He said that he can scalp the market if he wants to as well, and this is how he scalps it. And you see you can take it down to that move right there to there. How much is that? It's only like 5 pips though. So mind you, just from personal experience, from me trying this out one time, you want to understand the trend of the market. If you're in an uptrend or you're in a downtrend, well, let's say this. If you're in an uptrend, you want to look for sales if you're scalping. If you're in a downtrend, you want to look for sales if you're scalping. Simply because if the market is in an uptrend, trending market, the buyers are going to be a lot longer, the sales are going to be a lot shorter. If you're in the downtrending market, the sales are going to be a lot longer, the buys are going to be a lot shorter. So definitely keep that in mind when you're doing this, guys. But other than that, man, I think I pretty much hit all of the points. You know what I'm saying? Make sure you guys please comment to let me know what other videos you want to see. I'm going to exit out of this mode. And please comment to let me know any other videos you want to see, because it really helps me out to understand the direction I need to go next. But you know, if you do like the video, definitely leave a like, and you guys already know what to do. Definitely subscribe to stay updated when I post new videos, man. I'm bringing content every single week, man, so let's get to it, man. I'm trying to stay on it. I've been slacking a little bit. I'm just trying to get back get back in the dream vehicle. So but other than that, man, I'm out. Peace.